Hello, I'm your host, Mike Gelb, and welcome to the Consumer VC. If you like conversations with VCs about the latest in consumer innovation, you're in the right place. This show is brought to you by Propeller Industries, the leading strategic finance and accounting partner for venture stage companies. Now, I know this is free content, but that doesn't mean that I don't have a favor to ask. If you're enjoying the show, please subscribe on YouTube or whichever platform that you're listening on. And if you want the full experience, subscribe to my newsletter at theconsumervc.com. You'll receive a weekly update of all the news surrounding the emerging consumer ecosystem, and you'll be the first to know when a new podcast episode drops. Now, our guest today is Vanessa Larco, who is a partner at NEA. NEA is one of the largest VC firms. They have 25 billion under management and one of the most iconic VC firms ever. Previously, I've actually had one of the firm's founder, Chuck Newall. So definitely check out that episode if you want to learn more about NEA. Vanessa started her career in the gaming industry, but doesn't invest in gaming, which is quite interesting. Some of her consumer investments include Mejuri, Kindred, and Greenlight. We discuss what is tricky about investing in gaming companies, metrics that matter in consumer, and can you still have $1 billion outcome in consumer inventory businesses, and much, much, much more. Without further ado, here's Vanessa. Vanessa, thank you so much for joining me here today. How are you doing?
Hi, Mike. Good. Thanks for having me.
Oh, it's an absolute pleasure. I want to start very early on in your career. I mean, you were making the first Microsoft Surface that, of course, had touch. Can you walk us through why Microsoft first of all decided to create? I know it's obvious now, right? But why Microsoft wanted to create a touchscreen computer, a computer where you can actually navigate through touch, and also some of the complexities that you had to deal with in creating the actual touch control.
Yeah. So Microsoft for a very long time believed in touch technology. I mean, they had I remember Bill Gates like in the I don't know, maybe early 2000s, maybe had a tablet with like a stylus. I don't and it was big and clunky, but they didn't call it a tablet at the time. It was called something else, but they tried, right? And we had Palm Pilot. Palm Pilot was kind of like a mini tablet with its mini stylus. And so I think people have been wanting to do touch handhelds more interactive devices that weren't keyboard mouse for a really long time before Surface emerged. And the story was that like the founders of Surface kind of sketched out how this like table would be this multi-touch super collaborative thing on like a napkin, and it got greenlit and they like spun out a mini team to build and prototype it, and ended up being really a magical experience. It was like Mission Impossible style, mind blowing when you first interacted with it, because there weren't very many colorful, animated, like you put your finger down and bubbles would explode from your finger touch. There was just so much delight baked into that experience, that we were like, I'm sure someone's going to want to buy this table. That's really cool. And so we built really cool technology, um, that was fun and delightful without a ton of thinking around who would be the buyer for a $14,000 table. But we sold a bunch. We sold to like casinos. We sold to some restaurants and bars in Vegas. Like we sold, I think, to like a cruise line. Like it was very novel. It had this novelty factor. But my job was to develop the controls, like the right click menus and the pinch to zoom and the swipe to turn. These are controls, right? For developers to use when they built applications for the Surface device. And that was a really hard task because developers are like, well, how many of these devices are there? And how am I going to make money if I put my app? There was no app store. There was no concept of app store at the time. So they were like, how am I going to make money building an app for this Surface? And I'm like, we'll pay you. And they're like, yeah, I'll just port over my Windows application to Surface. And yeah, it'll have a little triangle mouse, but just have people drag it around the screen. And we were like, no, 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 no. We want to design something totally different. Like no mouse because you have 10 fingers. So your app needs to support 10 touch points at any given. And their heads they were just like, what are you talking about? Like, how do I design an app without a mouse? Like, I don't understand what that even looks like. So we had to develop our own internal apps that were like, had really interesting design paradigms. to then show developers like what it could look like if there was no such thing as a right click menu. Um, and yeah, it was really interesting. It was really interesting to like try to talk to people about where design is going who ultimately had no financial incentive to jump on board. So there was a really good lesson there, by the way. And then the table went away and it turned into a tablet, which makes a lot more sense.
Yeah, I mean, and also this was something that was, new and also like, hard to imagine as well of that, this was actually becoming the future because it wasn't quite there yet. What did you kind of learn about that experience when it comes to, just UI when it comes in hardware?
Hardware is super hard. I remember like we designed something cool and then the hardware team's like, not gonna work. We're like, oh man. So we'd go back and like design something else. Like, what is this? And they're like, not gonna work. We're like, dang it, hardware, make things work for us. It's really hard to design software and hardware at the exact same time. So I learned that lesson the hard way. And then I think the interaction design is just tricky. There's like one of our designers, I mean, it's maybe not politically correct anymore, but he's like, they'd be like, okay, well, we'll hire more designers to figure this thing out. And he's like, look, 9 women can't make a baby in a month. Like, some things are just going to take time. And I think when you're designing a new paradigm, design just takes iteration and it takes time and it takes, like, you start here and we're like, well, that's not quite right. So then we iterate and iterate and we're like, you know what? Let's throw the whole thing away. That was a bad idea to start with. Let's start with a new idea. And these things just take time.
Yeah, no, that makes totally, totally. And I mean, kind of grouping that, hardware, software, I mean, I cannot only imagine how challenging that is, from that perspective. And I know that you then worked at Xbox and as well as on their and also on the new kind of way to communicate, which was through speech to actually through speech to actually communicate with a device too. Talk to me a little bit about some of the challenges when it came to when you were actually creating speech technology.
Yeah. Okay. So first of all, V1s, the first version of anything, is super fun because typically there's no precedent. And that's really exciting. It's also really hard because, again, there's no precedent. And so uh, for speech recognition for Connect, for Xbox Connect V1, it was one of the first far talk devices. We called it far talk because there's close talk speech recognition. And then the only far talk speech recognition technology we had was car. It was like the car audio where you talk to your car. Um, and that's like a very, like, there's very few commands. It's pretty set forward. And you also have sometimes had a screen on your car that would tell you like what things you could say to it. So we're like, okay, this is different because this is not like transactional. You're going to play video games and we need voice recognition for media and entertainment. And it's in your living room in a like highly social place. And so we're like, well, how do you make this fun and whimsical? And how do you make it not weird for you to be sitting on your couch talking to your Xbox? And through all of our user interviews, people were like, yeah, no, that's weird. Like, I look like a weirdo. I'm talking to my Xbox. And you would wake it up by saying, Xbox, play movie. And they're like, yeah, that's weird. And I'm like, no, it's fun. So we played around with like different sounds to like make it sound like, doo-doo-doo, like it woke up and this is like fun. And then we'd give you like this feedback to encourage you to keep going and keep talking. And we'd have these little animations on your screen. And we tried all kinds of things to make it seem less weird. But again, it was a design challenge. How do we teach people what you can say to the device? At the time, it couldn't do like natural language processing. We were very limited. We didn't, most of our users on Xbox weren't on Xbox Live. Like, they were not connected to the internet. So we couldn't do speech recognition in the cloud. We had to do it on device. And the device was almost 10 years old. So we had very old hardware and very limited memory. So there's only so many commands we could load on the device. And so had like technology constrained, we had cost constraints, and we had like design constraints. And so it was gnarly, but it was really fun to think through what it would look like. And then when Alexa came out, like, my head exploded. Like, whoa, a far talk device with no screen that can do natural language processing. This is bonkers. So yeah, it's been fun to see how fast technology has evolved, especially in the home for consumers.
Did you think that when it came to, because totally understand from the use case of or customers or fans of Xbox saying that no, that's just really weird to actually talk to Xbox and say, hey, wake up, Xbox, I want to play you now. But did you always have an inkling that even though the feedback was weird, that this was maybe where we were going, or this was one type of way to actually communicate with technology?
Yeah, I thought that like we would interact with technology with gestures, with speech, with touch, with keyboard, with mouse, and I still believe that to be true. And I think um, it's more like immersive tech, and you start blurring the lines. I think the trick is finding the right controls for the right tasks. And so, like, yeah, maybe controlling your TV with voice is not great, right? Like if you're like next channel, like that's way more obnoxious than just hitting like the button on your remote. So you do have to really evaluate like what's the task at hand and what's the best medium to achieve that task. But the technology is pretty limited right now. Like speech recognition is getting better, a lot better. Gestures has kind of frozen. Like we haven't made any progress since Xbox. Maybe now with with Apple Vision, it'll revive a bit and that takes off. Maybe we'll like get the next gen of gestures. But I still think gestures is really interesting, and I'm still very inspired by like the Minority Report screen with like the originally one with Tom Cruise like zooming into things and spinning things and like like I still think that there's some information that's better manipulated with gestures than with mouse and voice. We're just not there yet.
Yeah, and well, it felt like with maybe gestures or that they kind of maybe saw like a rise and like a fall quite quickly because people didn't really, or more so that where you actually are kind of fully immersive and you actually were able to move around and play a game moving around. We kind of saw like a rise of that quite quickly, and then maybe there wasn't as much investor interest a few years ago. Um, is there an immersive technology that you don't think going to be is going to kind of take off the way? I know that gestures we still think that like we're pretty early on with, but is there I guess a immersive technology that you don't think is actually going to that you maybe aren't as bullish on?
No, I just think that like it has to be the intersection of it makes sense for us to use this interaction model or this immersive technology with like this really cool thing that we want to do, and like that has to lend itself to that cool thing, and then it has to be a great end-to-end experience, right? And if it's not a great end-to-end experience, then nothing else matters. If it's a great end-to-end experience but it's like $1 million, well that's not attainable. So there's like there's like a whole list of things like it's amazing to have some real like innovative technologies take off. There's like a litany of things that have to like fall perfectly into place for something to get adopted and take off. um but I think for a lot of this stuff, like it's possible. It's just like how many of those things have already lined up and how many are still left to line up is the real question. And that's just timing, I think.
That makes sense, and also that, the overall experience has to be amazing, or, the technology actually has to line up. It can't be, there's certainly a difference when if there's, a lag or delay or even if the gestures, it's actually not picking up the gestures or or what have you. Um, what what is can I know that you kind of transitioned a little bit from building new technologies in order to maybe focus on gaming, if that's fair to say. Can you talk to me a little bit about what how did you think about creating new games for iOS, and a little bit about that transition?
Okay, so the transition felt a little more natural because I'd been at Xbox, but I worked on the platform team. And again, I worked speech recognition, but my job was not just build speech recognition experience in the platform, but then convince developers, again, like Surface, to go use speech recognition in their games, right? So then I went out and met with all these game developers and would try to understand like what games are you building for Connect? In their case, it was like very clear how they're going to make money. They sell the CD-ROMs at the time, so we're like, okay, now they're convinced that they can make money off this, but now how do they bake it into their games? So I spent a lot of time with game developers in game studios trying to get them to build stuff for Connect. So when I decided to leave Microsoft, um, I wanted to go I wanted to move to the Bay Area. I wanted to go work at startups. So like that was like criteria number 1, criteria number 2. And at the time there was this like explosion of social gaming companies. And everyone at Xbox was like really annoyed by them. They were all like, "Oh, that's like cancer. These are the worst games ever. How are they making so much money? How are they getting tens of millions of users?" And my ears perked. I'm like, "Ooh, that sounds like disruption. That sounds like you guys are threatened. I should like if I want to move to the Bay Area and I want to work at a startup, I should go work at a gaming startup, a social gaming startup because that seems like it's disrupting console gaming." I was wrong, but I moved to the Bay Area. I took a job at Playdom, and we were building Facebook games. And I learned a ton because I came in with this like Xbox mentality of everything has to be magical and everything has to be perfect. And like there's no timelines. Like we had timelines, but we were all like all about the creative process. And I get to play them and they're like, we A B test everything. It's a mathematical equation. There's no like we don't value creativity. We just like take a game, reskin it with a new theme, test out the theme. If it's a low cost for acquiring a user on Facebook, that's our theme. And then we just like optimize, 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 A B test, A B test, A B test. And I was like, what is this world? um, but I was fascinated by it and it was so profitable. Uh, and I was like, wow, we're making a lot of money here, like a lot of money. And I learned a lot about A B testing and data driven decisions and moving fast and breaking things and all like the Silicon Valley, the MVPs, the whole thing, the lean startup method, all the things that were like all the rage in 2010. Um, and then it all came crashing down pretty hard. Facebook killed the ability for us to manipulate the news feed. The Facebook in-app game currency was also killed. Like so many things dried up. We burned out our users because our experiences ended up becoming spammy and not fun. So we ended up having pretty shitty experiences. And it just died. Like the whole industry just kind of like just like gone. And that was hard. I was there on the upswing and I was there like for a lot of the way down. And so I learned some valuable lessons of like, yeah, there's a time and a place for data driven decisions. And there's a time and a place to lean hard into experience and brand and design. And the question is, when do you lean into which? And that's the art of the whole thing.
Yeah, I mean that it kind of seems like from that experience working there and seeing like the rise and also the fall, it was kind of valuing virality over creativity or and like the actual is that fair to say?
Three metrics. And it's still true for all companies, three metrics, but we were like hyper optimizing for the three: virality slash distribution, monetization, and then we needed retention, right? Like we needed people to retain because that was their CAC to LTV equation. So we put in all these viral gates. Like we needed to get viral because that would bring out our CAC down, and then we needed to monetize because that would bring our monetize and retain. That would bring our LTV up, and we were just constantly balancing LTV to CAC, LTV to CAC, because that's how you kept going. And I used to have this curve that I would draw, and maybe I can do it with my hands. But basically, CAC rises, right, over time because you acquire your most enthusiastic customers at the beginning really cheaply. And then over time, you have to spend and spend and spend to acquire like the people that are more skeptical, right? So that CAC goes up. And then your in gaming, the truth is that like your ARPDAU or like your average revenue per user actually goes down. At the beginning, it's really high because again, these are people that love social games and want to spend on social games and will spend a lot of money on social games. As you get the more skeptical users that are more expensive to acquire, they also spend less in your games because they're less into the gaming thing. So their LTV is lower. At the point where these two curves intersect, that's like the death point for your game. That's when like the game stops. Like you can't acquire anymore because your CAC and your LTV are break even, and then it's over. So the whole time, every day we went into the office, the whole point was like, how do we change the slopes of these curves so that like our game lives on another day? Like how do we keep CAC down? Like how do we squeeze it down? How do we keep LTV up so that they never intersect? And that was the whole thing.
That was the whole thing. Those three metrics, and as well as what actually happens as you stretch it, and actually acquire new users, the relationship between CAC LTV. What what have you learned? I know that you don't invest in gaming at NEA. I would say that what What have you learned from, I guess, these experiences that actually makes gaming incredibly hard for to actually start like a gaming studio or to actually launch a hit game today?
Nobody knows why something goes viral. Like, why does one meme go viral and other memes don't? And it's not because they're like spot on. There's a lot of spot on memes that like don't go viral. It's the same concept. Like, you can build a beautiful game, you can build an incredible game, and it just never hits. And so I think the hard thing for me is I was in gaming for a really long time. I can tell you, I can look at a game that's a hit and tell you why it's a hit. I can look at some games that aren't hits and tell you why they weren't hits. But I can look at, but then if you show me an amazing, beautiful game and say it didn't hit, why? I don't know. Like sometimes I like genuinely, I'm like, it's beautiful art, great sound design, really great game economy, very well balanced, amazing gameplay. I don't know. Like, maybe user acquisition strategy wasn't good. They're like, nope, we went through all the channels. I'm like, I don't know. Like, I don't know. I don't know. I don't know why it's not a hit. And then sometimes I look at games that are like hits, one hit wonder. Like they're hits for like a moment in time. And I'm like, why this? Like, why this? It's like off. Like it's not that great. I don't know. And it's also like songs. Like some songs are hits and some songs are dud. And some songs that are hits on the radio, you're like, this song sucks. Why is it a hit? I don't understand. And so, I mean, that's why I don't invest in gaming because if I knew I could reliably spot a hit with accuracy, I would just be building games right now. I wouldn't be investing in them. I would just go be doing it. Like I don't know. When there's a hit, they're so profitable. They're so profitable. Like for my little dinky Playdom game, we got to like 24 million in ARR in like 4 months off a 600K budget. And then I remember joining my first enterprise company and they'd been at it for 7 years and they're like, "Our revenues crossed 10 million ARR." I'm like, "I'm sorry. How long have you been at this?" They're like, "7 years." I'm like, "And you're just here?" And they're like, "Well, we had to build it." And then I'm like, oh my God. Like in gaming, one of our studios got to 100 million ARR in 6 months. Like, man, is this how the rest of the world? And they're like, yes, sorry. Like what you experienced in gaming, that's not the real world. It takes years and years and years and years and years. And like most people don't get to 100 million ARR in their first year. And I was like, oh, in gaming, that's a thing. That's a real thing. You get to $100 million in revenue in a year in gaming.
Is that still possible today?
I think so. I mean, I haven't spent a lot of time in the gaming industry since, but
Yeah,
like,
yeah, yeah, yeah.
yeah, like games that are hits make so much money. So much money. Um so yeah, if I knew what it would take to generate 100 million in revenue in a year, like Mike, it's been great being on your podcast. I'm out. Like I'm going to go do that right now. Like
No,
I'm not going to
totally,
be sitting
totally.
here, you know?
Totally. So I know after being gaming, you then went to and had and with worked at Twilio and Box. Then that landed you at NEA. Why did you decide to become an investor?
That's a good question. It was never part of my plan. I love building and shipping products. I think there's no greater joy than working really hard on something and then seeing your dashboards light up and seeing people use your product and getting the feedback. That is just awesome, awesome, awesome feeling. So I never thought I would leave that. I think NEA caught me at a really good time, which was it was right after a big launch that my team and I had worked on at Box. And I wanted to do something big and bold and risky again, like that what the project had just taken on. And it wasn't extremely obvious to me like where I'd get like I didn't see anything that felt like a step function in risk and learning for me professionally in product. I mean, I talked to a lot of companies and I looked at a lot of things internally in Box and I don't know. I was like, okay, if I leave Box, I will be splitting the monolith at another mid-sized company. I'm like, no thanks, I just did that, not doing that again. Or I can be like the first head of product at a early stage company. And I was like, well, if I'm gonna do that, I'd rather start my own company. But I didn't have an idea. Or I can go be like middle to bottom management at a huge company like Meta and Google. And I was like, that doesn't exactly sound like it's my cup of tea. So I just didn't know what I wanted to do. And NEA was like, hey, I got to them over the years. They offered me to come join. And at first I said no. I'm like, I'm not an investor, I'm a builder. And then Pete Cincini and Forrest Basket and Scott Sandell, they were like, look, we'll teach you everything we know. I was like, that's a pretty damn good offer. Like getting to learn from some of the greatest people who are promised me to teach me everything they know. Like, how do you say no to that? So I was like, okay, I'll go do this venture thing. I'll do it for 2 years and then I'll go back to building products. And gosh, it's almost been 8 years. It'll be 8 years in October and I'm still here.
It's amazing. That's amazing. Congrats. What what have you? Because I know that you're see it. Looking at your portfolio, seems like you're a generalist. If that's fair to say, you invested in enterprise SaaS companies. You've also invested in consumer companies. How? What's your overall viewpoint or approach to investing? Since you're investing in multiple different categories.
Well, I would say that I would my major, I call it like major and minor. My major is B2B apps, formerly known as SaaS, right? But then I can't help myself on the consumer side. And I joke with my colleagues, I'm like, I'm a good consumer investor because I'm not supposed to be investing in consumer. So every time I do a consumer deal, it is one that I've like, I can't stop thinking about it. I'm obsessed with it and I'm going to go to war for it because if I don't win this deal and if I don't get to work with this company, I am not going to get over it for a very long time. And so, um, because I'm not supposed to invest in consumer, the deals I've done are ones that I have like enormous conviction in, and that's really fun. Uh, but they're all apps that are all like technology enabled in one way or another. But across both, for me, it's the user experience. Like the thing I obsess over is retention and engagement metrics and seeing people love a product, whether it's an enterprise product or a consumer product, just that product love is what makes this job for me really fun.
This episode is brought to you by Propeller Industries. If you run a high growth business and you're focused on profitability, extending your runway, and improving your operational efficiency, you probably need a finance and accounting whiz that will grow with you. Well, instead of hiring someone full time, what would be cost effective is working with Propeller Industries. Propeller Industries is a leading strategic finance and accounting partner for venture stage companies and has partnered with over 1,000 startups and high growth businesses across consumer products, consumer tech, and enterprise. Some of the brands that they've worked with are Liquid Death, Olipop, Hims, Farmer's Dog, Away, MoviePass, and Giphy. Propeller also provides specialized support for fundraising and M&A with transaction advisory services. Propeller's TA team of former investment bankers and investors can step in on more of a project basis when pursuing full-scale financing and M&A. There's a link to Propeller Industries in the show notes if you want to learn more information. Love that. So talk to me on the consumer side of it. What are, examples, and obviously you can use your portfolio, but like what are some examples that of the reason why you actually why you actually ended up loving the company or just really couldn't stop thinking about it?
The truth is, I most of the time I just deeply relate to the problem they're solving, and I want to see a solution to that problem. It's like not the most sophisticated thesis, but if I look across like what's the common denominator, it's that. I'll start with Robinhood. I met those founders in like 2015, way before I joined NEA, and they told me about Robinhood. And at the time, I was like scrambling to get up to speed on like financial literacy and investing because I'd started saving money and it was all in cash. And I'm like, this is dumb. I need to figure out how to invest my money. And I didn't have enough for like a wealth manager. That'd be like comical, right? And I didn't want to put it in like mutual funds because I saw the fees and I'm like, no. So I was reading books and trying to learn it myself, like books, and then also like some blogs I'd come across, right? Uh, and I was like, okay, so I opened an account on Fidelity, and I'd have like $100 to invest at a time, at best. And it sucked because it was $7 commission fee. So I'm like, okay, so I buy a share of something, and then $7 has to go for that commission. So then I found in Fidelity they had these 50 ETFs that had zero commissions. So like that's all I would buy. And like it was the 50 ETFs I could buy with zero commission. That's all I had in my Fidelity account. And so when I met Beige and Vlad and they were like, yeah, we're getting rid of commission fees. We're like you can trade on Robinhood, any US equities, zero commissions. I was like, what? I don't have to be limited to 50, like anything. And they're like, anything. I'm like, how do I get in on this? Like, how do I get me off the wait list? I want in now. And I interviewed to work there. I was like obsessed with it. And they gave me an offer to be head of growth, but I want to be head of product. And they're like, Deju's the head of product. So I was like, okay, that's true. So I didn't end up joining. And then when I joined NEA, I ended up joining the board of Robinhood because the founders and I had this great relationship. Um, but yeah, that to me, I was like, oh my God, I like this is I need this. Like where do I sign? Like and every consumer company that's in my portfolio, it's the same thing. Mejuri, I had enough money to buy myself some jewelry. Um, and I like didn't know where to buy jewelry. Like I wanted real gold. But like I can't afford Cartier. I couldn't afford gold Tiffany. Like where do you go? Macy's to go buy gold? Like where do you buy gold jewelry? And so my friends from Miami were all talking about this company, Mejuri, that they had bought their necklace and their hoop earrings from. And then I saw it pop up on a 500 startup list. And then I met the founders and I saw them grow this business and this brand. And everybody I talked to loved the product. And when they showed me their metrics at the Series A, it was insane. Like the repeat rates, the margins, the product love. It was, and the sophistication around how they built their business was so impressive. Um, and I didn't win the Series A. Like Felix beat me to it. They issued a term sheet way faster, and so they won that one. But the B, I was like, I'm not gonna lose this. Like, I'm not gonna lose this deal. Like I have to. And then I see, and it was like torture because I didn't get the A, but then I would see them everywhere and hear everybody talking about it. And it was just like a needle into like I felt like my heart was just needles everywhere, right? It was just like every single, it was just like one other needle added. And I was like, this is so painful. I have to work with this company. Um, and then like I don't know, Kindred, which is my most recent consumer. I led the Series A. Incredible founders also. But even for me, like I have 3 kids. When I travel, we like to stay at Airbnbs or in homes because we need a kitchen, right? And we need like a bathtub, and we just need a little space because we have very young kids. Airbnb is like wildly unaffordable right now. Like I don't know if you try to stay at an Airbnb for like 3 or 4 days, which is what I have when we take vacations. It's bananas. And so Kindred came and they're like, yeah, Airbnb is unaffordable, but people like staying in homes. So we're going to do this asynchronous home swapping thing. So yeah, you could go stay in New York for a week for like $500. I was like, wait. I can stay in New York for a week for $500. How does this work? And they explained it to me. I'm like, whoa, this is really smart. And like, where do I sign up? I need this in my life. And so, and then I was at a wedding and someone who I didn't know was at the table and they were talking about how they signed up for Kindred and it's been amazing. And I'm like, Kindred, yes, Kindred. I'm like, yes, me too. And it was a very competitive Series A. And I was like, I've got to work with this team. Like, I will not get over it if I don't get to work with this team.
Yeah, Justy's been on the podcast. She seems absolutely
She's
terrific
amazing.
from Kindred, and also so interesting how with the home swapping, how even to think about supply and demand, how they actually need to match as well, right? Because of course, when you obviously let are going someplace else, someone then takes your home. So it's a really kind of interesting model as well, just from like with that dynamic with supply and demand, which is quite different. Obviously, it's like an Airbnb or really anything else that's in the market.
It's true. I mean, like none of these businesses are easy. Like pulling off Robinhood was not easy. And there was like so much, I mean, very public ups and downs over the years. Not easy to build a business at scale and succeed at what they set out to do. Mejuri, also like not trivial to build what they're building, actually very complicated. You think of like supply chains, you think of mining gold, mining diamonds, like the whole thing. Like from like the raw materials, gold is one of like key thing commodities that are traded, right? Like they're buying actual gold. So they were looking at the gold prices on like a daily basis. I mean, it's a very complicated business, but if you can pull it off, it's a really great business. Same thing with Kindred. Like it is not trivial to build what they're building. It is logistically difficult. Um, it is difficult from a branding. It is difficult from marketing. It's difficult on so many angles. So that's when the founder piece comes into play. And so I not only have to like believe and love the product and the market, But I also have to believe that these founders can execute, because none of these businesses that are exciting are easy.
Totally, totally. I'd love to also, because I know that you said that one of the big, apart from the founder, one of the big things that you look for when it comes to a company, or is it, and on the consumer side, it comes from maybe a personal pain point that you then are, intrigued by, and it's, hey, if it's not only my personal pain point, maybe there's a, let's back into this, and maybe there's a huge market here. But how also from like the experience perspective, since I know that is huge for you, that the entire customer experience and also maybe the interface as well. Um, how do you once you see a company, and maybe a company that is serving a personal pain point, like you've just so beautifully kind of gave us with these three examples, how do you then realize that, okay, these are actually the best kind of companies in the space, or what I believe is the best companies in the space, and that are going to win?
Well, a lot of the thing about that's interesting about consumer that doesn't hold for enterprise is a lot of the time they're really the only ones doing it. Like at the time, Robinhood was really the only the company that was like, you know what we're gonna do? We're gonna do trading with zero commission. Everyone's like, what? How? How? So there was no competitor, right? At Mejuri, there was a lot of competitors, but once they broke out, it like the way they were doing it and how they were doing, like a lot of their things, there was like nothing that really was similar at the and Kindred, like, I mean, I think there's a couple copycats now, but when I first met them, like there was nobody doing this in the US. There were some like parallels or interesting things in Europe, but nothing in the US that was doing this way. Greenlight, debit card for kids. They were I mean, it's been tried in the past multiple times and failed. But at the time I saw them, they were the only ones in the market trying to do this thing in the US. And it made a lot of sense of like, why now? It was tons, like for all these companies, there was a big fat why now. Um, and yeah, so I think in consumer versus enterprise, like the why now matters a lot more. And most of the time, people have tried your idea before and had failed. But why now? There's like a different reason why you will actually succeed this time. And there's probably no one else doing it. Like most people are like, it's been tried 10 times before you. It's going to fail again. So, no, there's not like, there's no one else. Once you succeed, there's like 100 copycats right after you. And that's, I think, where the user journey, the experience, the brand, it's really authenticity and trust. Like that's going to be end up being your moat, right? And I think it's a real moat in consumer. Like if someone like your experience buying a Mejuri product, or your experience trading that first stock with Robinhood and not getting charged commission, and you're like, whoa, this is awesome. I went from like $7 commission to no commission, um to like, Kindred, you stay in your first Kindred home. Like you hear how people describe their first time staying in a Kindred home. And like everyone describes all these experiences like it's magical. It's just magical. Like making that first trade and not getting charged $7, like mind blowing. Going to the Kindred home and it's so warm and welcoming, and like I'm taking care of the cat and watering the plants, and I'm happy to do it because I feel so lucky to be in this home. Like the way people describe these products, people just like love them. And then that's your moat. So when there's a copycat, people are like, oh, it's not authentic, it's not genuine, blah blah blah. So I do think there's a moat to the whole like experience thing.
Yeah, no, that for sure, for sure. How also do you think about business type? And because I know that, you predominantly invest in B2B SaaS, but even type of business, like thinking about like Majuri, and thinking that, they are like an inventory based business, and inventory based businesses are just very different to, software businesses, even though, if they utilize, software in order to sell, like the D2C channel, they're still, inventory based businesses. I know NEA has, a long history about investing in, inventory businesses. But as an investor, and how you think about your overall, portfolio, and as well as the returns, inventory businesses can be quite different to software businesses. How do you kind of juggle these two things when it comes to inventory and software? And maybe is it that big of a deal?
Yeah, it is a big deal. Different businesses have when they exit, they have different multiples on revenue. So as an investor, as a venture, like that's actually what I'm really thinking about is how is this going to be valued on the way out? And as long as you're applying the right multiple and valuation when you invest, you should be okay assuming the growth rate is there. But yeah, inventory businesses, like one, the margins have to look much better than the average inventory business, right? So like first things first, the margins have to be 50% and up. Like you just need margins that are healthy, i.e. look kind of similar to like software margins, right? Like you want them up there. Like you don't it'd be hard pressed to like be in a business that has very very low margins that'll stay low. Like that the business is always like they're excited to be at 10% margins, like that's probably not a venture investable business. You need higher margins. And then you want to look at growth rate. Like it needs to be have some reason why it's going to grow like a venture business, right? So like you look at SaaS and you're like, well, it needs to grow at this rate. You look at some consumer needs to grow at this rate. And so yeah, I think the hurdle for inventory based businesses, or I don't know if it was brick and mortar, whatever, the metrics need to look pretty similar to like a software business, and that's a high bar. So, like, will I invest in another inventory-based business? If another one has these types of metrics, yes. Have I seen many with these types of metrics? No. And so I look for growth rate, I look for margins, I look for repeat rates, right? So I want to see that people are repeat purchasing or retaining like you would expect them to retain if it were a software business. So, yes, I invest in many different types of businesses, but they're business profiles all have to look kind of similar when you look at just the numbers. And the valuation we assign to them has to be in line with how the market would value them later on, which like inventory businesses get valued different than like a marketplace business.
Yeah, well, that's what I'm kind of curious about too, because inventory-based businesses, it's really hard for an inventory-based business that to actually achieve, like, for example, a $1 billion valuation. Whereas not that it's of course also really challenging for software businesses to do that, even though we've seen, a lot of unicorns they become and then maybe go in the past couple of years. But typically for, for inventory-based businesses, it's very hard to kind of achieve that kind of threshold, which that I've been kind of told by some investors that's kind of like what we look for, right? Like that is that's what we're kind of underwriting for in order to achieve that. So, do you what when you do look at inventory businesses, do you look at it in terms of the same light, or are you a bit more concerned about if it's not $1 billion valuation that that you hope that they're able to get to? Is it okay? How are we're going to be very very kind of concerned or very zoned in on in terms of how much you're actually going to be fundraising and on the dilution side.
Look, no, there's no way I'll invest in a business that I don't think can have an exit that's over $1 billion. There's just no way.
Oh,
So it's
okay,
like
okay,
well, our fund size, like it doesn't lend itself. Like I can't. I have to invest in something
doesn't make sense. Does
that's over a
doesn't make
billion.
sense.
So I have to believe that this can get to revenue scale where it's valued at over $1 billion. If you look at inventory businesses, like if you look at my portfolio, like their revenue scale, gosh, if my SaaS companies were at that revenue scale, huh, like they'd be public. They'd be public companies right now. Um, so like the bar is different, right? Like my inventory business is by and large like way ahead on that front. But it's different type of revenue. It's valued very differently. That revenue is valued differently than like a SaaS revenue. And so, but all that is to say, given their growth rates and their margins and where they are in scaling, like I, it's not crazy to think that those types of outcomes are possible. But the bar is just really high. The bar is super high. So that's why I would say like the category is venture investable, but for like the top 1%.
Yeah, no, that's really helpful because like one of the I guess debates um for inventory businesses that's come up is does it kind of look like in terms of what the returns should be for them? Does it look more like a private equity type of return model where you're trying to get maybe a 3 to 5x return on your investment instead of, a venture return, which is like maybe let's call it 10x plus, if that's fair to say. So just because it's very, very hard to achieve that $1 billion threshold that you kind of need.
Yeah, it is. It's very hard. Um, so I think it depends on the company. It depends on their growth rate. It depends on like the quality of the revenue they have. What were the margins? How much that came from repeat? How much of that is stable revenue? Um, so yeah, it's super hard. Like I think it some very small percentage of it can lend itself to venture based on their growth. But the majority of it is maybe private equity, and the majority of it might just be a great lifestyle business, like a very profitable, super exciting lifestyle business. And there's absolutely nothing wrong with that.
In the beginning, when you talked about gaming, you talked about how gaming is based off of three metrics: virality, monetization, and retention during your time working for mobile games or iOS games. When it comes to consumer, what would you say are maybe the three metrics that you look for?
I mean, it's still the same thing. It's well, not virality, but it's distribution, right? Like, how do you distribute? When Instagram, like when brands started catching on to the power of Instagram and micro influencers and influencers, like that was a unique distribution channel, right? And so I think where you can distribute a lot of product pretty efficiently for very low cost because it was a pretty underutilized or undiscovered distribution channel. And so a lot of companies were able to build big followings and big businesses because they were able to double down on this distribution channel that was untapped, right? So I, all that is to say, like distribution channel is super important for any business, consumer, enterprise, doesn't matter. But like distribution, how do you get this thing in the hands of people? Or otherwise known as like CAC, if you want to put a number on it. How much does it cost you to get this product into people's hands? So distribution is a really important metric. Then you still have monetization, like how much money can you make off it? And a lot of that is like margins too. Like how much money do you keep after you sell a unit of this thing? Um, and then the last is retention. Like you have to retain your users because if you're paying to acquire them and you don't break even on, I highly recommend trying to break even on first transaction or within the first year or within the first couple months if you can. But most business models rely on like renewals for this business model to work. And so you've got to retain your customers. And the retention piece is a lagging indicator. Engagement is the leading indicator. And so you want to build amazing things in your product to keep people engaged and coming back. And I think a lot of product managers' time is spent on the engagement metric for a lot of good reason. It's like the core of your thing. Like if nobody likes it, they're not going to pay you for it. If they don't pay you for it, then you can't afford to acquire them. So it all starts with like build something great.
Totally, totally. I think, especially in today's market, there's been a lot of chatter about growth versus profitability. Does it make sense to actually, kind of have your own destiny and actually becoming profitable, or does it make sense to still really strive in terms of achieving growth? In your mind, especially as you think about from your lens as a VC investor, how do you think about this kind of balance between growth and profitability?
I mean, in an ideal world, you'd be able to grow really fast, 2 to 3x profitably. But like that's man, that's really hard. That's like it's not impossible. I've seen it, just not often. And most of the times I don't see it because they're like, I don't need venture money. Like I can do this profitably. I don't need your money. So like, all right, fair. I don't get to see the most of it when it does happen. But there are some businesses that like, well, we have to spend to grow at this rate. But the trick is you have to believe that at some point you can rein it in and still keep growing and make money. So like I think we lost that part of the equation, which was yes, spend to grow. But if at some point you can't spend, can you still keep growing? Can you become profitably when you need to? And we just got so far away from that. Like so far away. We were like, you never have to be profitable. Ever. And I'm like, well, like you kind of want to be able to have a line of sight to profitability. So like if you need to pull that parachute, you can pull the parachute, right? But if you've spent so much to grow that the parachute will never deploy, like that's not okay. And so what I say is like, yes, if you're taking venture money, the expectation is you're going to grow like a venture company. So you're going to have to spend to grow. But you don't want to spend so much that you completely lost sight of what profitability would look like at any given moment.
Yeah, that's a very, very those are Those are very, very good points. I'd love to as well hear switching gears a little bit, but we'd love to hear your view about AI in the consumer world. Since of course AI is maybe the next is obviously the next theme or the current theme that that really has changed computing and also how we research or and a lot of different kind of use cases for it. But what's your lens in terms of what's investable when it comes to AI or even like or unique use cases in terms of problems that AI can solve as relates to consumer?
Well, the one thing, the one lesson I learned at Surface was like, don't build technology for technology's sake. I think there's a lot of like really cool demos and really cool things people are building with AI that don't have like a really good end to end use case or don't have a really clear pain point it's solving. So I think, look, AI is going to be everywhere. It already is everywhere. The adoption of it has been phenomenal. But people aren't like, "Ooh, I'm an early adopter of AI." No, it's just like high school kids getting their homework done by ChatGPT. It's, me trying to plan an itinerary for a trip with my family, and I'll use Perplexity for that, right? Like and it's creeping into all kinds of things, and I think it'll continue to do so, and it'll be everywhere. And so I think it's going to do great things and be disruptive for travel. I think it's going to do great things and be disruptive for personal finance. um, I think it can. Um, think it could just be everywhere, right? Like, and it is already getting everywhere. But I also think the one thing people aren't talking about is I think it's going to enable entirely new business models. So I think like, could you build a business with just four people that's 100 million in ARR? Like with AI, like maybe not today, but like maybe in a couple years. Or maybe there was a business model that was like wildly unprofitable, made no sense 5 years ago. But if they use a bunch of AI tools off the shelf, maybe it can have really interesting margins all of a sudden. Maybe it could be a really profitable business all of a sudden. And so, what I'm excited about, yes, I'm obviously excited about AI first forward apps, but I'm I'm almost more excited about people that are like, I'm solving this problem. I don't know. I'm a travel agent or I'm this, I'm that. But in the background, behind the scenes, I'm using a shit ton of AI to make this thing work, right? Like I'm making this business actually operate with really interesting margins, or I can give this really interesting experience or super customized experience for a user because I'm using all this like AI stuff in the background. Like I'm not an AI company, but I leverage AI. And so what types of companies are gonna come about or gonna be interesting because they're built using the AI tools that other companies are building. And so I'm most interested about that. Like really excited to see what new business models and what new categories get created because people can use this technology to build these companies.
What I find fascinating there is what's then if with these new business models, what would be maybe the role with venture capital within some of these new business models where you actually have, companies that are really small actually using AI to actually build these incredible businesses that they might not actually maybe they might not need venture capital in order to build these businesses.
Maybe they won't, but some will, some won't. But that's always been the case. Some will, some won't. Um, Some may need the capital to go in or not. Maybe they're really profitable if they stay in their state or in their hometown, but they want to expand globally. And hey, turns out you need some venture capital money for that. So maybe the businesses won't need it up front, but maybe they'll need it to go big, or maybe they don't need it up front, but founders may want to sell some secondary, or maybe they want to go public, or there's a million different reasons along a founder's journey where it might make sense or might not make sense to take venture money. So I don't know. I think venture will still have a, a role to play in tech innovation.
What's one book that's inspired you personally and one book that's inspired you professionally?
So one of the books I really like that I think about all the time to this day is From Good to Great. It's just really interesting thinking about how to turn good companies into great companies and what that like those factors were, because all my companies want to achieve greatness, and I would say like a lot of them are great at this stage, but they need to continue being great at the next stage, not the next stage, not the next stage. And the game changes from C to Series A, from A to B, from B to C. Like it's like the whole set of challenges completely shifts overnight. And you're like in a new ball game. So like there's new rules to the game every 2 years, every 2 to 3 years. And From Good to Great just has some very applicable lessons, I think. The Five Temptations of a CEO, I really like. I thought that book was great. I like just went through it really fast. I like would sit in my parking lot at home, just like didn't want to. I didn't want to end. I didn't want to get like shut off. So I really like leadership books. I'm fascinated by the quality of leaders. Like, why do people follow certain people? Holds true in politics too. Like, why do people vote for certain people? When I'm just like, I don't get it. So just deconstructing like what makes someone lead and what makes a bunch of people follow. And so all the books I can get my hands to just really understand the psychology of following leaders, I find really, really interesting.
I appreciate that. Good to great, and also Five Temptations of the CEO. I think we've had a couple past guests that have mentioned from good to great, and then Five Temptations of the CEO. I think that's the first one. So Vanessa, very, very, very original. Um, my final question for you is: what's maybe your one piece of advice that you have for founders that are currently building?
Um, it's always hard. It's always hard. So it's a marathon. It's truly a marathon. Like I look back, what's been funny is I've been doing this for a long time. 8 years, I feel like it's a long time, almost 8 years. And it's always funny because CEOs are like, well, I just need to make it through the seed stage. Like the seed stage is the hardest. When I get to Series A, I'll have tens of millions or 10 million plus in the bank, and then like, things will get so much easier. And then it's like, nope, whole new set of problems that are just as hard as not harder. And they're like, okay, but if I could just get to my Series B and raise like 20 to 25 million and have that in the bank, then my competition should subside and these things will get easier and blah blah blah. I'm like, yep, those things do get easier. But then you're gonna get a heaping level of surprise and the next new things that are super hard. And then like, okay, but if I just make it to my Series D, then I can hire a really experienced executive team that can help me with this stuff and it should get easier. I'm like, yep, those things get easier, but then you unlocked a whole new set of even harder problems. And so um it takes stamina. It takes perseverance. It's such a long game. It never gets easier. It only gets more interesting. So I would just say, like, take care of yourself. Surround yourself with people you really trust, and that people who want to see you win. And give yourself some grace. Like you're gonna make mistakes. You're gonna make the wrong decisions, but like, be kind to yourself because it's a very long road.
Great piece of advice. Yeah, problems always arise. New problems, even though when you think, oh, if I just have this one person, or if this one thing what went right, there's always new problems to solve. Vanessa, thank you so much for your time. This has been a lot of fun.
Yeah, thanks for having me.
And there you have it. It was terrific chatting with Vanessa. Vanessa, thanks again for coming on the podcast. If you're enjoying the Consumer VC, sign up at theconsumervc.com to our newsletter. There you'll get all the latest consumer deals that are happening, and you'll be the first to know of all new podcast episodes. Thank you.